If you own silver, the next 30 days are not normal. And this time, it's not because of a rumor, a headline, or a price spike. It's because something has already changed behind the scenes. Decisions have already been made quietly, and this short window is the gap between those decisions and the moment the public feels them. That gap is where control still exists. Once it closes, reaction replaces choice. Let me be very clear right at the start, because this is the part most people miss. This is not a random 30-day period. This is the phase where banks are no longer debating what to do. They are implementing it, slowly, quietly, without announcements. And history shows that once this phase ends, explanations come late, rules feel tighter, and people ask why no one warned them earlier. I also want to say this calmly. This is not a silver price prediction. I'm not here to tell you silver will hit a certain number tomorrow or next month. This is a system behavior warning. It's about timing, not targets. It's about how financial systems behave when pressure crosses a line internally, even while everything still looks fine on the outside. Right now, nothing looks broken. That's exactly why this moment matters. Markets are open. Apps work. Statements arrive. The surface looks calm. But underneath, banks are adjusting. Policies are being interpreted more strictly. Liquidity is being handled more carefully. These are not reactions. These are positions being taken before conditions force public changes. Before we go further, if you value calm explanations, early warnings, and content designed for people who don't want financial surprises later in life, take a second to subscribe to KVP Autos. This channel exists for people who've already worked decades for what they have and understand that the most important moments rarely announce themselves loudly. Subscribing now helps you stay mentally ahead instead of being forced to catch up emotionally later. Now let's talk about banks, because this explains why this window is different. Banks do not panic on camera. They never have. They don't admit stress publicly. They don't announce fear. What they do instead is adjust quietly when flexibility starts to disappear. They tighten rules without calling it tightening. They introduce delays and call them temporary. They change procedures and label them routine. One change doesn't mean much. Several changes at once mean everything. If you're watching this from the United States and you're over 45, this pattern should feel uncomfortably familiar. Inflation that was supposed to fade. Market freezes called safety measures. Weekend rule changes explained only after they were already in place. At the time, none of it was described as urgent. It was framed as responsible management. And the people who waited for clarity usually found that clarity arrived only after options were already reduced. Let me stop you right here and refocus this, because this is where urgency actually belongs. This is not about silver going up. It's about access. Access to liquidity. Access to movement. Access to options before they quietly narrow. Price is something you notice later. Access is something you lose first. And this specific 30-day window is when access starts changing before most people realize it. Think about it this way. A locked door doesn't care what you're holding on the other side. You can have value in your hands, but if the system decides when and how that value can move, control has already shifted. Experienced people understand this. That's why they watch behavior, not headlines, during phases like this. Silver plays a unique role here, not because it causes stress, but because it reflects it early. When confidence starts thinning and flexibility begins to shrink, silver tends to signal before headlines do. Not loudly, not dramatically, but consistently. And consistency during quiet phases is never random. When banks feel safe, they expand. They loosen standards. They encourage activity. When banks feel trapped, they protect themselves first. That protection always begins quietly, and it always affects access before it affects price. By the time prices react in a way that grabs attention, the most important internal decisions are already behind us. That's why the next 30 days matter more than most long-term forecasts. This is the implementation phase. The gap between decision and impact. The moment when awareness still gives you options. Once this window closes, urgency replaces patience, and reaction replaces understanding. Stay with me, because in the next part, I'm going to explain exactly why banks are trapped in this position without ever saying it publicly, what signals matter more than headlines right now, and why this moment feels quiet instead of dramatic. And as you listen, think about this question and share your answer in the comments. Right now, does the system feel flexible to you, or does it feel controlled? And if you know someone who owns silver but assumes everything will come with a clear warning, share this with them. Calm information shared early has always mattered more than loud warnings shared too late. Nothing looks broken yet, and that's the point. When systems actually break, everyone sees it at the same time. But the most important phase always comes before that moment, when things still appear functional, when screens still work, and when reassurance sounds calm and reasonable. That phase is where pressure builds, not publicly, but internally. And that is exactly where we are right now. Banks are not facing a problem of headlines or optics. They are facing a problem of structure. Very simply put, their obligations are growing faster than their flexibility. That means the promises already made are larger than the room they have to move comfortably. This isn't about one bad decision or one bad quarter. It's about accumulated commitments meeting a world that no longer behaves the way it used to. I want to explain this without charts, without technical language, and without jargon, because this isn't complicated once you strip it down. Banks are built on trust and timing. As long as timing works, everything feels stable. Money moves in and out, rules stay flexible, and confidence holds. But when timing starts to tighten, even slightly, pressure shows up immediately behind the scenes, not in speeches, not in press releases, in behavior. When obligations pile up, flexibility disappears first. Banks still function, but they become careful. They reduce exposure quietly. They adjust policies without drawing attention. They prepare not for collapse, but for restriction. This is why nothing looks broken yet. The system isn't collapsing, it's stiffening. And stiffness is always the warning phase. This is where paper promises and real assets start to matter in a way most people don't think about during calm times. Paper promises work beautifully when confidence is high. They rely on smooth movement, predictable behavior, and trust that tomorrow will look like today. Real assets don't rely on promises. They rely on existence. And when systems tighten, the difference between those two becomes important very quickly. Banks know this. That's why their behavior changes long before the public conversation does. You don't hear them say they're worried. You see it in how they limit risk, how they slow processes, and how they quietly change what used to be easy. Risk reduction doesn't happen suddenly. It happens step by step in ways that seem reasonable on their own. If you've been around long enough, you've seen this pattern repeat. First come the small delays. Then come the policy adjustments. Then come the explanations that sound logical but feel different than before. Each step is justified. Each step is framed as prudent. And taken together, they tell you exactly what's happening if you're watching behavior instead of listening to reassurance. Silver sits right in the middle of this because it doesn't depend on confidence to exist. It doesn't depend on timing to be real. That's why silver doesn't cause stress in the system. It reflects it. When flexibility starts to shrink, silver tends to react early. Not because it's magical, and not because it predicts the future, but because it responds to pressure that already exists. This is why focusing only on whether silver goes up or down misses the point entirely. The price is not the message. The behavior around it is. When systems are loose, silver stays quiet. When systems tighten, silver begins to signal that something underneath is changing. That signal often appears while everything still looks normal. Here's the part most people struggle with, because it doesn't feel dramatic. Pressure does not announce itself. It expresses itself through restriction. And restriction always starts quietly. It shows up in how much risk institutions are willing to tolerate, how much flexibility they allow, and how much control they try to regain before anyone notices. This is also why panic is unnecessary right now. Panic belongs at the end of the process, when options are already limited. Awareness belongs at the beginning, when understanding still gives you mental flexibility. Experienced people know the difference. They don't rush. They observe. They recognize when a system is stiffening instead of flowing. Silver's role here is simple. It's a stress indicator, not a cause. It's a reflection of pressure, not the source of it. And when you see silver behaving differently, while the surface still looks calm, it's worth paying attention, not emotionally, but thoughtfully. As we move forward, keep this in mind. Nothing looks broken yet, because this is not the breaking phase. This is the tightening phase. And pressure always shows up somewhere first, even if most people aren't looking in the right place. In the next part, we'll talk about why silver tends to feel that pressure early, and why understanding that timing matters more than reacting to headlines once they finally change. Silver doesn't shout, it whispers first. And that's exactly why most people miss what it's trying to tell them. By the time silver becomes loud enough for headlines, by the time everyone suddenly agrees it matters, the most important phase has already passed. The signal came earlier, quietly, and only a certain kind of person tends to notice it in real time. Throughout history, silver has never been the hero of the story while the story was unfolding. It becomes the headline later. In real moments of financial stress, silver reacts early, not because it predicts the future, but because it responds to pressure before the pressure is acknowledged publicly. When systems are comfortable, silver stays boring. When systems begin to strain, silver starts to behave differently, even while everything else looks calm on the surface. This is why silver often moves before headlines change. Headlines are reactive. They wait for confirmation. They wait for permission. Silver doesn't wait for permission. It responds to stress in real time, especially when confidence quietly starts to thin. That doesn't mean prices explode immediately. Sometimes the signal is subtle. Sometimes it's inconsistent. But it's rarely random. It's a response to something tightening underneath. To understand this, you don't need charts or technical explanations. You just need to understand the difference between promises and reality. Paper systems are built on promises. Promises that money will move when asked. Promises that rules will stay flexible. Promises that tomorrow will behave like today. Those promises work beautifully when confidence is high. But when confidence starts to wobble, even slightly, paper systems become sensitive. Silver, on the other hand, doesn't rely on promises. It doesn't depend on timing or permission to exist. Physical silver is simply there. That difference matters more than most people realize during calm periods, and it matters very quickly once systems begin to tighten. This is why silver reacts to pressure early. Not dramatically, but honestly. This is also why older investors tend to notice silver before younger ones. It's not about being smarter. It's about having memory. If you're over 45, especially if you're in the United States, you've seen cycles come and go. You've seen moments when confidence disappeared faster than explanations could keep up. You've seen how paper assurances sounded strong right up until behavior changed. That experience creates instinct, and silver tends to trigger that instinct early. Younger audiences often look for confirmation in numbers and headlines. Older audiences look for changes in behavior. They ask different questions. They notice when processes slow down. They notice when flexibility quietly shrinks. And when silver starts acting differently in those moments, it feels familiar, not exciting. Familiar in a way that says, I've seen this pattern before. Here's the psychological part that's uncomfortable, but important. By the time silver is obvious, options are fewer. When everyone agrees silver matters, it usually means the system has already moved from flexible to controlled. That doesn't mean disaster. It means choice becomes more limited. And limitation is what experienced people try to see early, not late. This is why silver should never be treated as a hero asset that saves the day. That mindset leads to emotional decisions. Silver is a signal, a pressure gauge, a quiet indicator that something underneath the system is shifting. When you understand it that way, you stop chasing moves and start watching behavior. That's a calmer, smarter way to think, especially at this stage of life. None of this requires panic. Panic belongs to people who didn't notice the signal early. Awareness belongs to people who did. Silver gives you awareness first, not answers. And that's exactly what makes it valuable in moments like this. It gives you time to think before noise takes over. As we move forward, keep this framing in mind. Silver is not telling you what will happen tomorrow. It's telling you that pressure is building now. And pressure always creates windows. Windows where decisions are easier before they become urgent. Windows where understanding matters more than speed. Now that you understand why silver whispers before it shouts, the next question becomes unavoidable. If silver is signaling pressure now, what does that mean for timing? What does that mean for the next phase? And why does this particular 30-day window matter more than most people realize? That's what we're going to talk about next. Here's the part most people misunderstand, and it's why this moment is different from dozens of others you've lived through. Systems don't change with alarms, but they also don't stretch these windows forever. Phases used to take months, sometimes years. Today, they compress. Decisions that once rolled out slowly are now implemented faster, quietly, and all at once. That's why this 30-day window matters more than similar moments in the past. Nothing announces it. There's no official notice. No banner on the screen saying, "Pay attention now." Everything still works, which is exactly why people relax instead of observe. Windows never feel urgent when you're inside them. They feel ordinary, calm, almost boring. And that's what makes them dangerous to miss. Because once the window closes, it doesn't reopen with a warning. Here's what makes this specific window different. We are no longer in the discussion phase. We are in the execution phase. Decisions have already been made internally, and what you're seeing now is implementation without explanation. Rules aren't changing on paper yet. They're changing in practice. Liquidity isn't disappearing. It's being rationed. Flexibility isn't gone. It's being reduced, quietly. There is always a lag between decision and impact. Institutions move first. The public feels it later. That gap has always existed, but today it's shorter than most people expect. Digital systems compress time. Policies roll out faster. Adjustments stack up quicker. And that is why the next 30 days carry more weight than a generic forecast about sometime this year. Think back to past moments of stress. Changes didn't arrive as explosions. They arrived as adjustments. A delay here, a new requirement there, a process that suddenly took longer than it used to. Each change sounded reasonable. Each one was justified. But together, they marked a clear shift from flexible to controlled. Once that shift completes, behavior changes everywhere at once. This is the gap most people miss. They listen to reassurance and assume reality matches the words. Experienced people do the opposite. They watch behavior. They notice when access becomes selective instead of open. They notice when liquidity is treated as something to protect instead of circulate. They notice when rules are enforced more tightly than before, even if no new rule has been announced. That's what this 30-day window represents. Not a countdown to disaster, but the final stretch where awareness still gives you options. Where you can think clearly instead of being rushed. Where you can observe patterns without pressure. Once windows like this close, urgency takes over. And urgency leads people to act emotionally instead of intelligently. This is why timing matters more than speed right now. People who rush usually do so because they realize the shift too late. People who stay calm usually notice the phase change early. They didn't need alarms. They recognized behavior. Liquidity tightening is always part of this phase. Not a shutdown, not a collapse, just a tightening. Institutions become less willing to absorb risk. Process is slow. Movement becomes deliberate. This isn't meant to scare you. It is meant to explain why things feel slightly different, even though nothing obvious has happened yet. And this is where silver fits back into the picture. Not as a solution, not as a guarantee, but as confirmation that the phase has already shifted. When silver begins reflecting pressure while public narratives remain calm, it usually means we're still in the decision phase, not the reaction phase. That's the window most people miss. Awareness during this phase is powerful. It doesn't tell you what to do. It gives you room to think. It gives you the ability to watch closely without being forced to move. And once behavior changes across the system, that room disappears quickly. Pause for a moment and check in with yourself. If you feel a subtle tightening, not fear, not panic, just a sense that things are being handled more carefully than before, you're not imagining it. You're noticing behavior. And noticing behavior early has always been an advantage. If this resonates, comment "watching closely" below, not as a signal of fear, but of awareness. And if you know someone who believes everything important will come with a clear warning, share this with them. Calm understanding spreads farther than loud warnings ever do. Because once windows like this close, behavior changes first, explanations come later. And that's why this phase right now deserves your attention. Not because something is broken, but because something is quietly, decisively shifting. When access tightens, it doesn't feel dramatic at first. In fact, it often feels like nothing has really changed at all. Prices might still move. Screens still update. Headlines still debate numbers. And that's exactly why so many people misunderstand what's happening. They're watching price when they should be watching access. Let's slow this down, because this is one of the most important mental shifts you can make right now. Price is what you see. Access is what you use. And in periods like this, access always changes before price tells the full story. That's why focusing only on price can create a false sense of safety. Here's a simple way to think about it. Imagine standing in front of a locked door. On your side of the door, you're holding something valuable. It could be cash, it could be silver, it could be anything with real worth. But the door doesn't care what you're holding. If the door is locked, the value in your hands doesn't give you control. Access does. And access is controlled by the system, not by the price on a screen. This is the part where I want to re-hook your attention, because it's easy to drift here. When access tightens, price can still look fine for a while. That's what confuses people. They see a stable or rising price and assume everything is safe. But price is not protection. Access is. And by the time price reflects restricted access clearly, the restriction is already in place. This is what most people misunderstand. They think if the price is strong, the system must be healthy. In reality, systems under pressure often keep prices calm to avoid panic, while quietly changing the rules underneath. That's not deception. That's control. And control always shows up quietly first. When access tightens, the consequences don't arrive all at once. They arrive in small, reasonable steps. A delay that didn't exist before. A new requirement that feels minor. A process that used to be simple, now taking longer. Each change makes sense on its own. Together, they signal a shift. You might hear phrases like temporary, out of caution, or updated policy. None of those sound threatening. But experienced people recognize the pattern. They've seen how temporary measures tend to stay longer than expected. They've seen how updated policies quietly become the new normal. And they've seen how restrictions rarely roll back as easily as they were put in place. If you're watching this from the United States and you're over 45, this should feel familiar. You've seen moments when access changed before explanations caught up. You've seen how rules were justified after the fact. You've seen how people who waited for clarity often found that clarity arrived only once options were already reduced. This is not about fear. This is about recognition. You've seen this pattern before, even if it showed up in a different form. The names change. The technology changes. The behavior does not. Systems protect themselves first. Access is the lever they use. This is why price can be misleading during these phases. Price reacts to headlines. Access reacts to risk. And risk management always moves ahead of public discussion. That's why people who rely only on price often feel blindsided later, while people who watched access feel less surprised. Silver fits into this conversation, not as a guarantee, but as a lens. When access tightens elsewhere, silver often begins reflecting that stress quietly. Not because it causes the tightening, but because it responds to it. That response doesn't always look dramatic. Sometimes it just looks different enough to make experienced people pay attention. And this is where emotional control matters. Panic is what happens when access changes suddenly and you weren't prepared mentally. Calm awareness is what happens when you recognize the pattern early. The goal here is not to rush or react. The goal is to understand what phase we're in, so you're not surprised by behavior changes later. I want you to think about the people around you, the ones who say everything is fine because prices still look okay, the ones who don't like talking about systems or behavior because it feels uncomfortable. This is exactly the moment when calm information helps most. If you know someone like that, share this with them. Not to scare them, but to help them see what price alone doesn't show. Most people realize access matters only after it tightens enough to affect them directly. By then, the conversation has changed. Urgency replaces patience. Reaction replaces planning. That's why understanding this phase now matters so much. As we move forward, keep this in mind. When access tightens, it doesn't ask for your attention. It assumes you're not watching. The people who do watch don't need to panic later. They simply recognize the shift early. And that recognition is what keeps control on your side a little longer, while others are still focused on the wrong signal. If you've lived long enough to see a few financial cycles come and go, you already know something most people don't. The loudest voices are usually the least prepared. Experience doesn't rush. Experience watches. And right now, the biggest advantage you have isn't speed. It's perspective. This part of the conversation is not about panic, and it's not about urgency. It's about respect for experience. People who've been through inflation spikes, sudden rule changes, and market freezes understand a simple truth. Fear feels fast. Wisdom moves slowly. Fast reactions often feel productive, but they usually come from not understanding what phase we're in. Calm awareness, on the other hand, comes from recognizing patterns early. This is why experienced people think differently during moments like this. They don't ask, "What should I do right now?" They ask, "What is changing quietly?" They know that rushing into action is usually what happens after options have already narrowed. And they know that when the system wants you to rush, it's often because it benefits from speed, not from thought. Before we go any further, if this calm experience-first approach makes sense to you, take a moment to subscribe to KVP Autos. This channel is built for people who value clarity over noise and understanding over emotion. If you've worked decades to build what you have, you deserve information that respects that experience, not content that tries to scare you into fast decisions. Here's something worth pausing on. Fear and awareness are not the same thing. Fear pushes you to react. Awareness gives you time to think. That difference matters. Fast reactions fail because they're usually based on incomplete information. Calm awareness wins because it allows you to see behavior clearly before it's explained publicly. This is also why many silver holders tend to be more patient than emotional. They don't see silver as a lottery ticket or a hero asset. They see it as part of a bigger picture. A signal, not a savior. That mindset doesn't come from fear. It comes from experience. It comes from having seen how quickly narratives can change once behavior shifts. Let me rehook your attention here, because this question matters more than it sounds. Do you feel rushed right now? Or observant? Feeling rushed usually means you're reacting to noise. Feeling observant means you're noticing patterns. One leads to stress. The other leads to control. Experienced people also understand something else. You don't need to act on every signal. You need to understand it first. The goal is not to move fast. The goal is to avoid being surprised. And surprise is what happens when you ignore quiet signals because they don't feel urgent yet. If this perspective resonates with you, let me know in the comments. Do you feel pressure to act quickly right now? Or do you feel like you're watching the situation unfold calmly? And if you know someone who's feeling anxious, because everything feels uncertain. Share this with them. Calm thinking spreads just as fast as fear, and it lasts longer. In the final part, we're going to bring everything together, not with panic, not with predictions, but with clarity about what really matters as this window continues to unfold, and how experienced people stay grounded when others feel pulled in every direction. Before we close this out, I want to bring everything together calmly, without repeating what you've already understood. This entire conversation was never about predicting a price or chasing a number. It was about recognizing a phase where behavior matters more than headlines, and awareness matters more than speed. Silver was never meant to be the hero in this story. It's not a savior, and it's not a shortcut. Silver is a signal, a quiet one. It reflects pressure inside the system long before that pressure is explained publicly. When you understand silver that way, you stop expecting it to solve problems and start using it as information. And information, used early, is power. What we've really been talking about is system behavior. Banks tightening quietly. Access changing before price reacts. Rules adjusting before explanations arrive. None of this means panic. It means attention. The system doesn't break all at once. It shifts, and the people who notice those shifts early don't need to rush later. If this kind of calm, experience-respecting perspective is valuable to you, take a moment to subscribe to KV Autos. This channel is built for people who don't want loud predictions or emotional pressure. It's for people who want to understand what's changing before it becomes obvious. Subscribing helps you stay grounded while others feel pulled in every direction. Now I want to ask you something directly, and I'd really like you to answer it in the comments. Right now, does the system feel flexible to you? Or does it feel controlled? There's no right or wrong answer. What matters is that you're paying attention to how it feels, not just what you're told. If you know someone who owns silver, or someone who still believes everything will come with a clear warning before it matters, share this with them. Calm warnings help more than loud ones ever do, especially when they arrive early. And I'll leave you with this thought. The people who prepare early don't explain later. They don't argue. They don't panic. They don't rush. They move quietly, with clarity, while others are still trying to understand what just changed.